Welcome. We've been talking in great detail about the huge amount of money that is being spent on rejigging and reinventing the way Indian railways are functioning. Recently, I had the chance to speak with Union Railway Minister Ashwini Vaishnav as well. Now, another company that has been on the radar and has seen quite a stellar upside in its stock prices, RVNL, Rail Vikas Nigam Limited. Slew of recent news flow as well. They've signed an MOU with REC to finance pre-stipulated conditions and returns, a number of bankable projects. We want to ask the management a bit about that today. They've also received an LOA from Southern Railways. They're going to upgrade a railway station, the Varkala Shivagiri railway station in Kerala. And overall, this is a company that is right in the thick of what we're seeing in our railway revolution. To understand more about this, I'm joined now by Rajesh Prasad. He's Director of Operations at RVNL. Mr. Prasad, thank you so much for speaking with us today on NDTV Profit. Absolute pleasure speaking with you. Let me begin with this MOU with REC for 35,000 crore rupees. Now, it's a memorandum of understanding. When does it fructify into actual business, and can you give us more details on it?
Okay, so very good morning, Tamanna ji. Happy New Year and happy winters. Just now you were mentioning to somebody that this time winter is really very problematic. For the first time we are interacting with your esteemed TV channel, and we are also privileged to be here, the part of this particular show. So you have asked 2-3 questions. One thing you asked about the MOU between RVNL and REC, then you talked about the station development programs, then you said that recently you had interacted with the Honorable Railway Minister, and he had given the huge vision about the future railway infrastructures. So I will try to cover one by one since we are interacting for the first time. So I'll start with the RVNL. See, this is a 21-year-old company. On 24 January, we will be 21-year-old. And this company was incorporated for basically implementation of National Rail Vikas Yojana. And the mandate was for execution of project, resource mobilization. Though the resource mobilization issue was subsequently withdrawn because IRFC was already there, we have been basically Mini Ratna awarded, Schedule 1 awarded in September 2013, and subsequently a few months back in May 2023, we have become Navratna. This is a very vibrant young company and always looking forward. It has got a proven track record, and it has got the efficiency of a private sector and the authority and the trustworthiness of the government sectors. Last 12 years, it has been rated excellent by the Department of Public Enterprise. And the Government of India Ministry of Railway had assigned 180 odd projects, and we have commissioned 140 projects. We are working as per the vision of the Honorable Prime Minister and the Honorable Railway Minister. So let me start with the MOU which has been signed between REC and RVNL. As you know, this REC is a Maharatna company where the PFC, the government share, is about 53%. RVNL is also listed. It is government share is around 72.84%. The understanding through this MOU is that we can have the project financing up to 35,000 crores in next 5 years. We are also pioneer and trailblazer in project implementation through PPP model. We have got equity participation from 30% to 50% in the railway infrastructures SPVs, and REC have also given the consent that they will consider for the equity infusion in these SPVs. So it is a kind of a win-win situation for both the companies. This is number one. Number two, earlier we used to get the projects only through the nomination basis, and we are in business for the last 2 years and few months. The first bid which we got from the market was in the month of October 2021. So 2 years and 3-4 months. Now we have participated in the bids, which is approximately 210 plus, costing around more than 1.10 lakh crores, and we have bagged or become L1 in the bids costing around 34,000 crores plus. So in that connection, we are now participating in the HAM models. HAM model is the hybrid annuity models. I will cite 2 examples. The Masakani Paradip, it is a road project in Odisha. Then Chatra Expressway, it is a road projects in Jharkhand. So one is the 100% subsidiary and the other is we are having a partner. We have got a share of 50%. So there we need the project financing. So in time to come, what we foresee is that we are going to have large number of projects which we'll get, and we need to have some project financing. So in that connections, in place of going to the private banks, the other PSU banks and the other financial institutions, we thought REC is one of the better options. And being a government department, we feel comfort when we talk, when we deal. So it is a win-win situation for both the companies. This particular MOU has been signed on 2nd of January with a timeline of 5 years. And we aim to basically debt financing for 35,000 crores in next 5 years. And further, REC will infuse equity in these RVNL SPVs, the PPP model projects. Okay. So this was the first question which you asked.
I'll come back. I'll come back to it. So we'll break it up. We'll do it like a conversation. We'll break it up and come back to the other points. I'll definitely cover them. But I just wanted to put into context why RVNL is right now a company that the market is also watching. We cover the news from that perspective. It's because of the immense infrastructure spend in railways and the share that RVNL has of that. So just to put that in context, I want to play out a bit of this conversation that I had with Mr. Ashwini Vaishnav just earlier in the week. Listen in. What is then the capex for the coming year? Because the
we
railways
should maintain this level. Yeah. 2,40,000 crore is a very optimal level. Anywhere between 240 and 260 is what we should maintain, because when we do work at this level of this quantum of work we do, we should continuously focus on quality of work.
Okay, so I wanted to play that out just for the context of the amount of capex that is going to come in from the railways. Now, Mr. Prasad, as I understand it, RVNL has about 15 to 20% share in railway orders. Do you see that increasing? Can you give us a sense of what your order book outlook is? You have said, or the company has said, 1 lakh crore rupees over the next few quarters. Are you sticking to that? Are you increasing that? Give us a sense there.
So I will start with the vision of the Honorable Railway Minister. What he said that in this particular financial year, we have got a capex of 2,45,000 crores, and moreover, and more or less, it is likely to be maintained in next few years. So if you see the statistics in 2014-15, the capex was only 58,000 crores in the Ministry of Railways. Now, if you see the RVNL's turnover in 2014-15, it was maybe around 3,000 crores, 2,490 crores to be precise, and the PAT was 157 crores. And in 2022-23, it has gone up to 20,300 crores, and the PAT has gone up to 1,270 crores. Now, the first 2 quarters results have been out. It is there in the public domain. For the first time, we have crossed the number of 10,000 crores in first 2 quarters, and the PAT has gone up by more than, it is more than 700 crores. So in 23-24, we are going to have another breaking record as far as the top line and the bottom line is concerned. The order book, you said, see, what are our aims for this financial year? We wanted to have the top line growing to the extent of 21,000 crores plus, the bottom line growing to 1,400 crores plus. We wanted to have the order book of 1 lakh crores. But we may land maybe around 80,000 to 85,000 crores. But we are actively participating. We are eyeing so many projects. See, this is altogether a new field. Earlier, we were getting the works only on the nomination basis. And in 2 years and few months, we have transformed from the local rail infra to global all infra. And Honorable Prime Minister keeps on saying the reform, perform and transform. RVNL is the perfect example of this, that we have reformed, we have performed, and we are transforming. Now, if you see the statistics of RVNL, the last 10 years continuously, even during the COVID time, it has broken the previous year's record in terms of the top line, in terms of the bottom line, and we are very confident. See, the railway infrastructures, the Honorable Railway Minister had also said that it is very complicated and complex. And here comes the expertise of RVNL. We have got the proven track record. We resolve the technical issues through technical expertise and technical knowledge. We do a lot of value addition. We save a lot of time. We try to execute the projects in the fastest manner. Some of the things are not within our hands, but we have been delivering. That is why we have been able to commission more than 140 projects which have been assigned by Ministry of Railways.
Okay. You said that your top line is going to grow, your bottom line is going to grow. I want to come on your margins and just ask you about that, Mr. Prasad, and we'll pull that chart up which was showing, the quarterly performance of the company in the last few quarters. Margins have remained steady at 6%. Why is that? Even as your revenues have grown quite significantly, why are margins stagnant? And how do you see an improvement taking place there?
Okay, so let me explain. The gross margin upon turnover is basically stagnant to the numbers at around 6%. Last year it was around 5.9%, and again it is the same. The reason being is that the projects which we were getting on the nomination basis, we used to get the fixed nomination fee, management fee. And the margins, basically, we have got the different sources of earning. Number one is that the project which we execute. Number two, we get the dividends. We have commissioned 5 number of special purpose vehicles. So we get the dividends from these SPVs. And of course, we have got some reserve and surplus. We have put in the banks and we get the interest, etc. Now the model is changing. Now we have got almost 50% through the market, 50% on the nomination basis. See, in time to come, this margin is going to get changed because we are in the market. There could be a scenario that there would be some losses in some of the projects, but in majority of the projects, we have been doing a lot of value engineering at the stage of pre-bid. And we are allocating some risk also in the risk factors. And I can tell you very well that the first project which we got in Indore Metro, in 1 year and 6 months, we could basically do the trial for the metro, and this became the fastest metro in the country. And the margin which we got was more than the margin which we used to get on the nomination basis. Similarly, the margin which we have got the first overseas project, Maldives, again, the margin is more than what we used to get through the nomination basis. So in time to come, the scenario is going to be changed. A lot of risk factors would be there, but we have totally geared up. We have transitioned from the contract manager's role to contractor, and we have been delivering, and the market has also been appreciating this.
Can you give us your sense of when you're saying the margins will grow, and especially for these projects in Maldives, you're doing a project in Kyrgyzstan as well. I'm assuming with these projects, RVNL can, bump up their margins versus what you do for Government of India. Can you give us a sense of how much we can see an increase in margins?
Madam, at this stage, we cannot tell anything.
Okay.
But the kind of professionalism and the kind of technical expertise we have got, we are 100% confident that in time to come, you will get the results. Okay. We cannot predict the margins at this very stage, okay, but I have cited the example of the first Indian project which we got through the bidding, first overseas project which we got through the bidding, and the results are very good and encouraging for RVNL. And see, one more thing which I wanted to tell, the Honorable Prime Minister keeps on telling, this infrastructure creation is directly linked to the social justice, social requirements. Then intangible benefits are there. It increases the ease of living, ease of doing business, boost to economy, overall development. And then, of course, the market capitalization of this company goes up, which is roughly touching now around 40,000 crores.
Yeah, no, of course. Undoubtedly, a majority of the work is for social good, and that is also what is being rewarded by the markets. I had asked you earlier, Mr. Prasad, and if I may revisit that question, in terms of share of railway contracts, how do you see that increasing for RVNL? And if you can give us an idea of some of the, new exciting projects that are in the pipeline.
See, let me start with this, that we have got an order book of around 65,000 crores. Slightly more than 50% is through the bidding. And see, we have got the proven track record in the railway infrastructure segments. So we are, our first target is the railway projects. The second is the metro segments. We are very confident because metro segment is one segment where the large number of cities, more than 52 cities are going to have the metros, and a lot of technical expertise are required. And presently we are working in the metro segments in 7 cities. So coming back to your question about the railway infrastructures, see, we are very keen. A lot of projects are likely to come in time to come. And the capacity augmentation projects are one of the projects where we are very keen to participate and bid and get from the market. See, the nomination has been stopped, but we are equally keen even today to bid and get the works. We are very keen to see the DFC extensions are now going to come in time to come. So the north-south corridor, Sonnagar to Andal, that particular Dankuni corridor. So the tenders have also come. Then similarly, high speed. Presently, only one section is under construction. And by 2047, we can have more than 10,000 kilometers of high speed corridors. So we are very keen. See, here comes the expertise of this particular company. So in time to come, you will find a lot of railway projects in India and also overseas we will be getting. Regarding the margins, again, I'll come back to you. Since we are through the bidding, we'll have the challenges are there. We have to prove the competency and we have to get the margins improved. After all, it is a government company, it is a listed company. We are responsible for the margin and the overall growth of the company.
Just one quick last question. I know that the company is looking at projects beyond just the railways. If you can quickly tell us about that.
See, let me start with the railway segment is a very big segment. So we constructed around 20 number of workshops with a 3D approach, that is a design, develop and dedicate. So these turnkey projects are now being used for the manufacture and the maintenance of the coaches, wagons, rolling stocks. So we are very keen to enter into such kind of turnkey projects, whether it is in India or whether it is overseas. Madam, in the beginning you asked about the station development. See, we are also eyeing for some of the projects of the station development, but more interested in the capacity augmentation. The recent tender you asked, yes, we have got one tender which is around 125 crores in the state of Kerala. Timeline is 2.5 years. The approximate building size is G+5. See, wherever we are working, we are doing a lot of capacity augmentation projects. For example, Kharagpur to Adityapur. Anybody can go and see the kind of stations we are making. It is all world-class stations. That is part of the third line project. And somebody can see the pictures of these stations, beautiful stations with modern amenities. And the architecture of these buildings are depicting the nearby palaces. So we are very focused, we are very keen. And as I said, this is a very small company. We have got around 400 odd persons and the contract engineers altogether, it will be around 1400. And with a turnover of around 20,000, 21,000 crores, every per employee will be, output will be 14 crores. Wow. So you can imagine the kind of efficiency of this particular company.
Absolutely. A very interesting conversation. I wish we had more time, Mr. Prasad, but thank you for speaking with us on NDTV Profit. It was our first interaction, but here's to many more.
Thank you very much.
We'll take a very quick break, but on the other side, we're keeping our focus on another story that's been developing. The Red Sea crisis means shipping rates have skyrocketed, almost doubled. Ajay, Sahai, DG and CEO at FIEO, that's the Federation of Indian Exporters, will speak with us on the other side. Sea crisis began a little before the New Year's and has been escalating ever since. Quick recap of what's happening. Yemen-backed Houthi rebels have been attacking carriers that pass through the Red Sea. It's a very crucial shipping route, a global shipping route. And while there have been now a coalition led by the US to push them back, it has been going on. As a result, major carriers have said they will not pass through this route. That means they take a longer route. This has driven up freight rates around the world and is bound to impact Indian exporters as well. To get a better sense of that, Ajay Sahai, DG and CEO at FIEO, joins me now. Mr. Sahai, very good morning. Thank you for speaking with us at NDTV Profit. Tamanna here. We spoke a few weeks ago when the crisis had begun. Has it gotten worse since then? Can you give us a sense?
Yeah, definitely the situation has deteriorated in last few days, I can say. Earlier, the large shipping lines, they have decided they will not be operating. There were feeders which were operating, but their numbers are depleting very fast. And I'm sure that within couple of days, probably they will also start not operating on the route. So it's definitely a huge setback to the entire EXIM trade, whether we are talking about exports or imports. Both are supposed to take a little hit. Of course, the shipping lines have started using the longer route of Cape of Good Hope, and that has pushed the freight cost. But freight is only one of the element. The shipping lines have come with the additional surcharges also, like contingency surcharge, Red Sea surcharge, or even the peak season surcharge. So if you are looking into delivery index, it has already gone up by around $1,000 in last fortnight. That only speaks of the freight across the 8 major routes. But if you are adding the surcharges, the increase is phenomenal.
Tell me about the Red Sea surcharge, because you just mentioned it. How much is that? Is that a recent thing which has coming? And also these feeder lines that you were mentioning.
In fact, these Red Sea surcharge is different by the different shipping lines. Some of the shipping lines, they have put $1,575 for a 20-foot container, $3,000 for 40-foot container, and $3,500 for reefer container. When I'm talking about the freight, the feeder vessels, in fact, when the large shipping lines have started not operating on the Red Sea, there were feeders vessels available where they were transporting from the end point through the Red Sea to some of the destination in the North Africa and Middle East, and even going up to the Europe. But their numbers have declined drastically. And looking into the threat to the human life, most of them have decided not to operate.
All right. I just want to understand the Indian impact in a bit of detail, because we haven't seen too much of stress as far as India is concerned. How much of our cargo import and export goes through this route? And is this going to develop into a concern in the days to come, or it won't be too much of a trouble?
In fact, if you're looking into to which countries we are exporting through this route, we are exporting most of the Europe through this route to the east coast of US and to the bordering countries in North Africa and the Middle East. So on a rough estimate, roughly total trade of around $230 to $240 billion happens through this route. It is important for us, so far as exports are concerned, because roughly $70 billion of our exports goes to Europe. And with this longer route, since the freights are increasing, there will be definitely huge challenges for export of commodity, for low value, high volume cargoes and perishable. So we feel that they will be the worst affected.
Impact for exporters, sir? What is the cost impact for exporters, very quickly?
There is, I think, depends on the route. For example, I will just give you two illustrations. From Calcutta to St. Petersburg, the freight was $4,100. It has gone to $8,100. In addition to that, we have different surcharges. From Calcutta to Mersin Port, which is in Turkey, rates have gone from $1,000 to $3,600. And if you apply the surcharges, the increase is around 500% plus. But that depends from different countries, different destination. But if the delivery index has gone up by $1,000, exclusive of the surcharges, that speaks of the huge increase in the freight rate in recent times.
Absolutely.
And the problem is that probably they may again increase in times to come.
That we have to keep an eye on. Thank you so much, Ajay Sahai, for speaking with us on what we're seeing developing in the Red Sea crisis and impact on importers and exporters. We'll take a very short break, but stay tuned. A lot more coming up on the other side. Keep it with NDTV Profit.